Good morning. I'm Manavar. Now we are entered into our subject income tax law and accounts. Is a paper which contains 5 modules and you have an exam for 80 marks. It's a very simple paper. It consists of theory and practical, probably in the ratio of 40 is to 60. 5 modules contains basic concepts, computation of income under different heads of third module that income from house property, and fourth module profit and gain of business or profession, and the last module that is capital gain. If we are ready to work hard, it's very easy to score maximum mark for income tax law and accounts. As far as I become students are concerned, as a subject which is very new subjects, I think all of you are familiar with the basic terms which are discussed in our financial accounting classes. So my humble request, all of you please follow all the classes and do the works accordingly. Let us start our subject today itself, income tax law and accounts. Now we can see that there is a general introduction regarding this income tax paper. We know that our government, it may be state government, central government or local authorities, they are taxed, imposed by the central government. Tax is a compulsory extraction of money from the people by an authority, which is an inevitable element of our budget. As we know that budget is a financial statement which shows expected incomes and expected expenditure. While we are preparing our budget, we know that it contains n number of revenues. There are different types of revenues we have. Basic or the main element of our revenue is tax revenue. There are two types of revenues as far as the government is concerned: tax revenue and non-tax revenue. As we all know, an economy needs a crores of rupees every year for expanding or investing in nation's infrastructure development, industrial promotion, defense, internal security, education, poverty alleviation, employment generation, health, etc. For these purposes, government raises funds by levying various tax. The entire tax can be divided into two, that is direct tax and indirect tax. So you can see that direct tax are those tax which impact and incidence are fall upon the same person, that is called direct tax. All of you please listen. Direct tax include tax on incomes and poverty, whereas indirect tax cover tax on commodities and services. The most important distinguishing feature between direct tax and indirect tax is the fact that in the case of direct tax, the impact and incidence of tax will fall upon the same person, whereas in the case of indirect tax, the impact and incidence of tax will fall upon different person. Usually, the central government administer direct taxes. Indirect taxes are administered by both the central government and state government. Now you are compelled to see some examples of direct tax and indirect tax. We know that Direct tax includes income tax, expenditure tax, wealth tax, etc. as we know. Indirect tax or sales tax, service tax, excise duty, custom duty, etc. From this discussion, it is very clear, or all of you be familiar, or all of you be capable of writing the difference between direct tax and indirect tax. What is meant by direct tax? What is meant by indirect tax? And examples of direct tax, etc. Now we move to the introduction of Income Tax Act 1961. According to Article 270 of the Constitution of India, levy and collection of income tax, excluding agriculture income. Agricultural income is exempted from the tax. So, levy and collection of income tax within the power of central government. However, the net tax are distributed between the central and the state as per the recommendation of the Finance Commission, which is appointed by every 5 years by the central government. So, this distributable amount does not include income tax on companies, tax collected from union territories, tax paid out of the consolidated fund of India, surcharge on income tax, etc. Now, as we know that a person is liable to pay tax on his income based on the provision of Income Tax Act 1961. I think there are 280 more than 200 sections, 298 sections, and 5 heads of incomes, thousands of subsections, 12 schedules are included in Income Tax Act 1961. Over and above these Income Tax Act provisions, we should consider some of the important rules and regulations for charging or for calculating the taxability of an individual. So let us consider these elements as pillars of income tax. Colloquially, we can say that these 5 aspects can be called as 5 pillars of Income Tax Act. So let us see in detail. First one, Income Tax Act 1961. As we have discussed, Government of India has passed an act during 1961. The act is called Income Tax Act 1961 that contain the law of Indian Income Tax Act. It came into force on 1st April 1962. That is extend to the whole India, including Jammu and Kashmir. It's a very important point. Almost all laws or acts which are not accepted, which are not extended to the whole India, including Jammu and Kashmir. But we know that during the 1961 Income Tax Act, that is applicable whole India, including Jammu and Kashmir. The main and most comprehensive enactment ever made in the history of income tax in India. It has subjected many amendments in the course of time. Despite the many amendments it had been subjected to, the Income Tax Act 1961 is still considered the mother enactment of our income tax structure. It consists of 298 sections. It's a very important thing. Income Tax Act, we are compelled to learn all these sections day by day. Thousands of subsections, 12 schedules, and many rules and sub-rules. Act broadly covers basis of charging, income exempt from the income tax, computation of income under various heads, clubbing of income, set off and carry forward of losses, permissible deductions, rebate, relief, double taxation relief, determination of tax liability in certain special cases, and powers, etc. A lot of things. So that's all about Income Tax Act 1961. And another one, that is Income Tax Rule 1962, that is framed to assist the implementation of various provisions of the Income Tax Act. Income tax rules prescribe the procedures, time limit, conditions, returns, forms, etc. regarding to income tax. Then another one, we are very familiar with the Finance Act. Every year, Union Finance Minister will present a finance bill in front of the Parliament along with the national budget. The bill will contain proposal of government for levy of taxes, rate of taxes for the relevant assessment year. Later we will discuss what is meant by assessment year. Then modification to the existing tax structure, amendment of the existing direct tax status or rates, rate of tax to be deducted at source, and advance payment of tax. All these things we are discussed in Finance Act. As we know, during the February last or March 1st this year also, our Finance Minister Srimati Nirmala Sitharam has presented Finance Act and passed by the Parliament. The houses will pass the bill after discussion and after obtaining the consent of the President. It becomes the Finance Act. Then, in some situations, any assessment year, the Finance Act has not been passed before 1st April. It may happen in certain circumstances. Such as circumstances, the tax will be charged at the rate in force as per the previous Finance Act or at the rate contained by the finance bill pending before the Parliament, whichever is favorable to the assessee. This is a very important point. All of you please bear in mind. And another one, another pillar, that is the fourth one, judgment rendered by the court of law. Many cases that may came to the High Court or Supreme Court, some verdicts has been came. So based on these judgment, some of the implementation procedures are laid down by the what we say that High Court or Supreme Court. So we can say that the judicial announcement of the these bodies on the tax disputes is another major item of our legislative structure of our income tax in India. Okay. And the last one, that is circulars, notification, orders and executive directions rendered by the CBDT. Any circulars or any notifications or any executive directions given by CBDT, they as and when required, are also considered as very important item of our legislative structure of our income tax. CBDT is the apex body of our tax structure. CBDT that expand as Central Board of Direct Tax. You can expect a question from this area, that is framework of income tax. 5 framework or 5 pillars: Income Tax Act 1961, Income Tax Rule 1962, Finance Act, judgment rendered by the court of law, circulars, notification, orders and executive directions, etc. Let us conclude this session here. As we know, we are discussing general introduction of our Income Tax Act 1961, 5 pillars of income tax, Income Tax Act 1961, Income Tax Rule 1962, Finance Act passed by the Parliament every year, judgment rendered by the court of law, it may be High Court or Supreme Court or any other bodies, then circulars, notifications, orders or executive directions rendered by the CBDT. Very important very important things that we are discussed here, that is CBDT, Central Board of Direct Tax, is very important thing. All of you please note down. CBD is the supreme authority regarding the direct tax of the country is concerned. There are two types of questions you can expect from this area, this CBDT area. First one, that is for 1 mark, that is expand CBDT. It's very easy. Central Board of Direct Tax is an apex institutions as this direct tax is concerned. Then next, functions of CBDT. There are different functions. First one, that is, it is constituted under the Central Board of Revenue Act 1963. For exam point of view, you have to write 5 or 6 points under these functions of CBDT. All of you please note down. First one, that is constituted under the Central Board of Revenue Act 1963 and is under the direct control of Union Ministry of Finance. And second one, it is in full command as regard collection of taxes and control of department. The board is vested with vast powers. It's very important functions which is discharged by the CBDT. Once again I will repeat the same. The board is vested with vast powers which includes power to make rules, to issue orders, direction and executive instructions on tax matters. And the last one, that is the circulars, notifications, orders or instructions issued by the CBDT now and then shall be binding on all assessees and officials. These circulars etc. constitute another important item of our direct tax structure. So it is clear. Let us conclude today's discussion here. Okay, all of you, thank you for your cooperation.